Hey guys, it's Wooly from SuertePanda.com. Welcome back. So today I just want to go over briefly what futures basis trading is and how you might be able to do it on Tastyworks if you want to. This is just like something supplemental, and I think it might be useful for those with larger accounts, like those with portfolio margin. It's like something else that you might want to consider, especially when implied volatility is relatively low, or like maybe there's not a lot of things going on in the market. So I thought it might be helpful. So I'll see you in my Tastyworks platform. Hey guys, welcome back to the platform. So I'm just gonna pop in some prices into the spreadsheet and then kind of like walk you through as I go along. So let's see how we can do this. So I'm just gonna pop in some prices while I talk. And maybe explain just like the basics of like how futures basis trading works. So you need at least two things. You need like one, the physical, and then two, the future itself. The reason why it's called the physical in the past, futures trading was usually used on like physical like food commodities, like for example corn, soybeans, wheat, etc. And then over time, it kind of expanded to like other products like oil, natural gas, things that we consume in our daily lives. And then eventually it went over into um, like non-tangible like goods like stocks. So for I guess just to keep it simple, and because I think most people are more familiar with stocks rather than like crude oil futures and things like that. If there's enough demand, I'll maybe cover those in a future video. But for now, let's concentrate on things that we kind of interact with digitally in our trading process. So like maybe the first one I'll go over like the S&P 500 futures, and then maybe we can go over into Bitcoin because I think those are going to be a lot of interest in that soon. So if you notice on the my kind of on the left hand side, you'll see like the prices of the some of the stuff that I'll go over. So let's see right now like the ES. Let me just type that in. Right now the futures price for is 4,166, and then for the S&P 500, it's 416.74. So right off the bat, I think we're like we're not in a great position um, in terms of explanation because right now, like the ES, this is the June futures um, for the S&P 500, and then the SPY, like which would be considered like the physical. Um, like right now, like the prices don't make sense to me unless the futures are indicating that by the end of June expiration for the futures that the market will actually be dipping a little bit. And then also the other thing to keep in mind is that like sometimes like the multipliers for like a full contract is a little like weird for a lot of people. So for example, like the ES futures, for every 1 point move, um like each point move, like for example, right now it's 4,166. So if it goes to 4,167, that's worth like $50. And then there's also what they call like the tick increments. So it moves in like by like quarters. So it moves by like 0.25, and each 0.25 is equal to $12.50. So if you multiply like the 0.25 by 4, um, that gives you a full point, and then if you multiply the $12.50 by 4, that gives you $50. So it takes a while to get used to. So hopefully like uh like maybe as we go along, it'll be easier to understand. So maybe if we pop back into um, the spreadsheet for a minute. So remember what I said, like each like right now, like the S&P 500 future, the 4,166. I'm gonna multiply that by 50 because that'll give you like the full um, contract spec. So that's worth $208,000 in uh, $208,300. And so in order to get kind of like the equivalent, like each future is worth about 500 shares of the S&P 500, like the ETF. So I'm gonna multiply that by 500 so we can kind of get to like a rough ballpark. And then there's also like terms like contango and backwardation. Um, that's a little confusing to most folks. What I actually like to do is that I like to just to keep it simple. Like that's why I'm multiplying out by like the multiplier so that like it's easier to compare. So what the ES right now, like the futures is saying that well, in by the end of June, like the expiration, if you decide to do one contract, it's only going to be worth 2,800, 200,000, 8,300, and then for the but like if you notice like the current price is 208,370. So the difference between the two is like to me that doesn't make sense. That this wouldn't qualify for like a good futures basis trade unless you're willing to unless you're shorting it um like in the future, like if you short the 500 shares of SPY and then you buy the 200 like the one futures contract, you could potentially, if you decide to short, like you'll make $70 on this trade. That's sort of like the one way to look at it. And then like if you like the return, like to me is not worth it because like, you have to tie up um so if like for example if you're shorting, like you're tying up like 500 shares worth of SPY just to make, I mean, wow, that's terrible. Like on a percentage basis, wow, that's like pretty bad. Like you might as well just like stick your money in the bank. So I wouldn't like for me, like I actually wouldn't even bother with this trade. It's like three hundredth of a percent, so it's like 3 basis points. So it's not even like anything. But this is where like let me flip back over to like the Bitcoin stuff. That's where it gets more interesting. So if you notice, like Bitcoin right now is trading 49,716 roughly. And the interesting thing about Bitcoin is that it trades 24/7. So on the weekend, like maybe during the week you were caught up on a business trip or like family stuff or whatever. But then like on the weekend you maybe have like a little bit of time. You could probably just like look at like the Bitcoin, like the actual cash and the Bitcoin future itself. So Bitcoin future, like the multiplier is also like a little bit different. Um, so each Bitcoin future is actually worth five. Well, they call it physical Bitcoin, but I guess like maybe that's not the right like to me that's not like a good term. Like maybe like a better term would be like the actual Bitcoin itself. So if you notice, like the Bitcoin futures, like the Bitcoin futures, the only not a bad thing, but I guess like on certain times, like it's not. actually trading. So it's actually kind of weird. But maybe in the future, because this Bitcoin future is like the CME future, and it might not even be available on for most people to trade on Tastyworks. Because I know like some people have the option to trade physical Bitcoin, but I'm not sure if I'm like we would be able to trade um like either the physical Bitcoin or Bitcoin future, and then so like I have to come up with like kind of like a workaround temporarily while we wait. But I just wanted to illustrate the concept. So if we go back to the spreadsheet real quick, I'm just gonna plop in some numbers. So like the actual Bitcoin, let's just like for now, I'll just type in like 4,900 and let's call it $600 even, just to make the calculation a little bit easier. And then the Bitcoin future is worth about 50,790. So then let me show you in the spreadsheet itself. And then there's also like things that you have to kind of take into account, like the buying power. But like um, but I guess we'll get to that in a minute. So let's see how can we explain this. Let me just see if I can maybe do the same thing. So if I take the difference between the Bitcoin future and then the actual Bitcoin, so that's like potentially $1,190. And then also don't forget, well, we'll have to multiply everything by five. But just like to kind of illustrate the difference between like the returns. So it's a little bit better. It's 2.34%. So it's like 2.34% within like a month. And also because like the Bitcoin future, this particular one expires in June. So it's like at the time of this recording is a little bit less than 1.5 months. So, I guess like if you're looking for stuff to do, well, you could probably maybe compare it against like a covered call, compare it against a a maybe like a dividend paying stock, or maybe to see like if there's other like interest bearing like things that you could do. Because there's like, for example, for certain digital asset exchanges or crypto exchanges, you can actually lend out your money. You might be able to get a little bit more. But again, like if you annualize this, like multiply by six, like yeah, that's still like maybe like a little bit better than like a 12% return. So you have to kind of like look through like all your options, and this is just like one way to kind of do it. But what would happen if like you don't have like for example I like currently right now like I don't have access to a Bitcoin futures trading or like even uh like physical Bitcoin trading on like Tastyworks right now. I think they have to still work through like some of the regulatory issues on like for certain states. But this is just like something to kind of think about for yourself if you do happen to have like access to this. But another way you can kind of to get around this. Maybe if you want to like also size it a little bit differently. I've mentioned in the past, like every 100 shares of MicroStrategy, um, that could potentially like work for you. So like if you wanted to do like like the futures like cash and carry trade, and that's just like an also like another name for it. It's sort of like using a futures sort of like in lieu of a covered call, but like the duration might be a little bit different. Like for example, with options, you have a little bit more flexibility. Some people they don't like the futures because one, it's a very big product, and then two, um, depending on how many futures uh, that you want to do, like it might be like a little too big. Um, and then also, I guess like for some people, just like feel more comfortable with I guess like just doing options because it's also smaller. And that's where I want to kind of like go over with you that uh, let's just say for example you wanted to do like a something similar to a future. Like what you could do is like you could do like a 3 month covered call, or you like the good thing with options is that you can kind of control like you like your like your timing. So let's flip back over to the platform real quick. I want to show you MSTR, like the options that are available. So like if you wanted to do like if you just wanted to buy like one MicroStrategy, 100 shares of MicroStrategy and then sell a cover call, you have like choices as to where you can sell it. So for let's just say for the sake of this example, um, right now if you wanted to trade MicroStrategy, you have to put out like $61,300. And then if you sell a covered call, you can still get a pretty decent return. Let's just say like you can sell like the 860 call, and you can collect about let's just say assuming you can get filled at the mid price, you can collect about 3,645. So let's just do the math on that real quick. Um, I'm just gonna plop it. 100 shares. Let's just do and then 3,3645. And another reason why you might want to consider future is that I guess like for a bigger account, sometimes like you're running out of like stuff to really put your trades on, just to like keep active, and like you like maybe doing like 100 shares at a time is a little could be a little frustrating for some people. So I guess like for those like people with like really big accounts, um, you have to kind of weigh like the the cost versus the benefits. So let's just say like this is just like for like what you just type down, like maybe if I make it easier this way, 100 shares. If you want to do 500 shares, let's just get rid of this for a second. Let's just do 500 times. So as you see, like if you decided to do 500 shares of MicroStrategy, you have to put out like 306,520, and then but you would collect 18,225 if you decided to do like 5 times 3 monthly coverage calls. Let's just do a quick and dirty um, a return over here. So like in this case, the options will actually be a better deal, because you're getting almost 6% on your money for almost 3 months. So it's actually it works out almost the same, maybe a little bit better for the options in this particular case. Um, because don't forget the 2.34 on the futures was only up to June. So if you um, well, depending on what the July futures could look like, uh, it could be a little bit more, a little bit less. So this is just like one way to think about it. Um, I know for some people this is like a little tough. It's a little bit much. But I guess like what I want to kind of like the takeaway is that like futures basis trading, it's almost like you want to think about it as a covered call. Um, and the reason why you wanted to put might want to consider putting this on is that like it might be like a little bit more like more capital efficient for certain trades, and then also um, like if you have a larger account, like it's also like something else to play around with, to see how you want to like kind of control like the timing of your trade. Um, and then so it's just like another way to kind of like use derivatives like against your underlying position. Um, so like I guess again, if you guys want to see more of this, or if you want me to maybe concentrate on one aspect of this, I'll be happy to do so. Um, if you guys can give this a like and a maybe consider sharing, subscribing, that would be great. Otherwise, like just let me know in the questions below in the comment section, like if you like this or if it's too complicated, or maybe you wanted me to cover or like other topics, or maybe you just want me to focus on just like one thing. I'll be happy to do so. But anyway, thanks for watching, and I hope you learned something, and I'll see you in the next video. Bye now.